Have you ever accidentally bought the wrong ETF? Or thought 2% interest on your savings account was a great deal? You're not alone. Today, we're breaking down 15 of the most common beginner investing mistakes, so you don't have to pay for them with your money. Let's start with mistake number 1, waiting forever for the perfect ETF. When it comes to investing, time matters more than perfection. Long-term investing grows exponentially, slowly at first, then faster and faster. But if you start 1 year later, you permanently lose that year of growth. If the stock market returned an average of 7% per year, starting 1 year late could mean 7% less wealth at the end. So, remember this. Better to start imperfectly than to wait perfectly. Start with any solid ETF. If you realize in the first few years it's not ideal, you can still switch without major tax consequences. Mistake number 2. Being happy with 2% interest on cash. In 2023, some brokers offered savings accounts paying close to central bank rates. Sounds great, right? But here's the problem. Inflation. $10,000 invested might grow to about $10,900. But after inflation, your real purchasing power increased by less than 2% over years. In many years, real returns on cash are actually negative. So if you want to build wealth long-term, cash is not the solution. Investing is. Mistake number 3, only looking at dividend yield. Dividends look attractive, but they're only half the story. What really matters is total return. Price growth plus dividends. Some ETFs pay huge dividends but barely grow in value. Others grow strongly but pay little or no dividends. Always look at the full package. Mistake number 4, not reinvesting dividends. If you're still building wealth, don't spend your payouts. Reinvest them. Money sitting in cash earns no real return. It is much easier to spend. Many brokers even offer automatic reinvestment. Use it. Mistake number 5, owning too many ETFs. One global ETF is often enough, but many beginners overcomplicate their portfolios. Too many ETFs, a massive overlap. For example, let's take ticker symbol IVV or SPY, both heavily invested in the same US stocks and are representing the S&P 500. Simple portfolios equals more clarity, fewer decisions, better discipline. Mistake number 6, chasing trend ETFs. AI, robotics, hydrogen, defense, cannabis. Every few years, new hype themes appear. The problem? You never know when the hype peaks. Many thematic ETFs are heavily concentrated. When one major stock of this ETF crashes, the whole ETF crashes. ETF does not automatically mean diversification. Mistake number 7, ignoring costs. Fees may look small, but over decades they become huge. For example, ETF A, 0.5% fee. ETF B, 0.05% fee. Over 30 years with the same return, but for ETF A you pay over $10,000 difference. Always check the annual ETF fees. Mistake number 8, buying the wrong ETF or stock. Sounds ridiculous, but it happens a lot. People buy the wrong ticker, the wrong index, or a sector ETF instead of a broad one. Always double-check the ETF name, the ticker, the fact sheet. Know exactly what you own. Mistake number 9, buying active ETFs. Active ETFs are just active funds wrapped in ETF packaging. Studies show 86% of active US funds underperform the S&P 500 over 10 years. Cheap, boring, passive ETFs still win. Mistake number 10, trading late at night. Buying stocks at 10 p.m. after work? Bad idea. Major exchanges are closed, liquidity is low, spreads are high. That means you pay more without realizing it. Trade when main markets are open. Mistake number 11, waiting for the crash. Everyone talks about crashes, but sitting in cash has a cost. Opportunity cost. Yes, markets might crash 20%, but they might also rally 30%. History shows being invested beats waiting. Mistake number 12, ignoring taxes completely. Don't let fear of taxes paralyze you. 2 basics. Use your tax-free allowance file. Return taxes if needed. That's it. Mistake number 13. Constantly rebalancing and switching ETFs. Selling winning ETFs triggers taxes. Taxes reduce your capital permanently. Only rebalance when your strategy changes, costs drop significantly, your risk profile shifts. Less trading equals more wealth. Mistake number 14. Overestimating your risk tolerance. Bull markets make everyone feel brave, but risk tolerance is tested during crashes. Ask yourself, could I handle a 40% drawdown without panic selling? If not, reduce stock exposure before the crash. Mistake number 15. Having a short time horizon. Stocks are risky in the short term, but over 10, 15 years, they historically outperform. If you need money soon, use cash or money market funds. Stocks are for long-term goals only. Those were the 15 biggest investing mistakes beginners make. You'll still make emotional mistakes. That's human. Thanks for watching. See you in the next one.